Well, good morning everybody. Welcome to Stockradar, Stocks on the Move for another week. Today's date is the 13th of April 2023. My name is Richard Lee and I manage the stockradar.com.au website for you. Well, as I signed off last week, I promised you another interesting week, and we've got another interesting week as usual on the market and specific stocks. We divide those two up, but the market's looking pretty interesting. There's plenty of good opportunities at the moment. The US indices are rallying quite well, the Nasdaq and the S&P and the Dow, but they've got a lot of resistance overhead. They've got to really crack some resistance before we reach some more substantiated moves over there. And we'll have a look at those charts a little bit later on. As I said to you before, I can't really tell you what's happening with the market. It's dominated by a few stocks, but I can tell you what's happening with stocks, and we're going to go through lots of those today. Some stocks are doing very nicely, as I said. So let's go firstly to the top 10. Top 10 trend intensity ratings this week. We've got Chalice Mining at the top, which is on the front page there. It's doing pretty well. It's made a new high and it's off. Steadfast, steady here on the chart. Steady, slow, small yield, 2.5, 2.8 I think. But, it's just moseying along nicely. And we've got another smattering of groups there. Washington, Soul Patterson, Viva Energy, Webjet, Auckland International, and Brambles has come in now. Chorus is still there and EBO is still there. So there's a few newbies and a few old ones in there. So that's the trend intensity top 10 for this week. Just thought I'd show you briefly just one of our trend intensity tables. What I'm showing you today is really just give you an idea of what I do, but I refer to what the website does. So just as an idea of one of the tables that I have here, diversified finance, when I talk about its importance of looking at individual stocks, rather than the top down, is because we get a lot of opportunities which you won't see if you do top down. So here in the diversified finance sector, it's actually rating at -8 on the trend intensity scale, so it's low as a group. And if we scroll down here, you can see these are all stock picks in green, non-stock picks in grey, neutral, and down here are all reds. So there are all these stock picks here, stocks that aren't stock picks at the moment, but we do have a few goodies: Steadfast, Sol, QBE, and Premier Investments, which is a bit flat, but they're doing okay, the ones we've got. So it's important to have a look at those stock-specific ideas. Now, the diversified finance group, as with all the tables I have, metals, telecoms, everything, they're all set out the same way. And if you go and look at these columns across here, you can see exactly what they are by just highlighting the question mark. And there's plenty of other bits and pieces in the about section of Stockradar for you. But these are the tables that monitor all our trading positions, so you get a good look at what we do, so you can take a trial there. So by joining Stockradar, what you do is you get support and guidance for our trade plan process. We also show live examples, as I'm showing here, updated every week. We do weekly data. Okay, so now trading tactics this week. I'll talk a little bit about trading stocks the how-to in a nutshell. Just look at those key elements that we need to keep focusing on to make sure that we're in the straight and narrow and doing okay and making some money. Okay, so let's get to the markets to start off with first. The Dow, as I said before, is moving towards resistance. It hasn't got through it. It's been encouraging the last 4 weeks, but we've got this downtrend line here and a couple of horizontal resistance lines here, and of course this is the highs up here. So it's got a significant amount of work to do yet. This rally has sort of been on declining volume. It's been green because it's going up, but they've been declining. And the momentum index is back to flat. So, I really need to see some more evidence here that this market's going to go higher. The more positive too, which have also went down along further in the last couple of years, the S&P and the Nasdaq. And again, you can see we've got some fairly heady resistance here. There's support back here, resistance here and here, and we're holding below here at the moment, although we've got high lows, which is encouraging. So this is all part of a bottoming process, or a potentially bottoming process, but we really need to see through this R1 level to get some really good impetus behind the S&P to move on its highs. Okay, and the Nasdaq is probably pretty similar. It's got resistance above it there. So all this R1 area here, you've got a couple of points here and a couple of points here. So we've got a slight uptrend here, which is sort of nice. We're hopefully looking at these high lows will continue, but we really need to break some of this resistance. There's been some nice buying here. So things aren't too bad. We just haven't got there yet. So positive signs there, but work to be done. Gold is also moving nicely higher, keeps going, hasn't really decisively broken through yet, but it's trying very hard. We've got a little bit of volume here, we've got a bit of good momentum, it's above the average, so if I was to run a trend intensity over to get an 8 or a 9, but we really need to get it through this level here to really start seeing these buyers get back in and some of these sellers reverse their positions. So that's gold. Copper, it's just been wandering around for the last couple of months doing nothing really, not giving us anything. There's a fairly good battle down here, plenty of volume happening down here, which is, means there's lots of buying, lots of selling, and the price is going nowhere. So that's what's happening with Dr. Copper, and I really can't tell you where it's going to be happening next. Momentum is positive just so, we're just above here, so I guess the bias is slightly on the upside. The trend is always the strongest thing, and I guess we've got a small uptrend developing here, but resistance is what we've got to get through. So resistance takes second place to the trend, but it's something that's worth watching and being alert to when you're moving on those areas. Okay, Brent. Again, it's had a rally from the OPEC meeting. It really didn't do very much to the price. It rallied, but it's still in this chocker range here. It's been in since the start of the year between about 87 and 75, something like that. So crude's really still going down. The pressure is on down. The spike had a little effect. So that's still going down. Okay, so that's the overseas indices. We can now have a look at the ASX 200, which is always an interesting one to look at, but we've had this sideways pattern for quite a while now. Let me just blow this up. The upside pressure is a little bit easing. It's a bit momentum-y positive there slightly, but I want to have a good look at this chart. Just blow this up for you. So we can see here this is our old high. So this is resistance 1, 2, 3, 4, 5 spots here. We've got a low down here. We've got a high low here. We're positive. We're rallying up here. This is the worrying one for me. If I just want to show you this chart that I tried to show you last week, would disappear pretty quickly. This is the highs in the S&P up here around 75.60, 75.70. These are the recent lows down around 64, 6,500. So this is the pullback from the last high we saw. And if you look at this volume here, it's been very heavy, and the moving up volume has been quite light. So basis normal technical rules, the pressure is down, heavily down there. And don't forget, we are above a major resistance level there. So we haven't got through. We've had many attempts. We still haven't got through. So like the overseas markets there, although we can get a bit excited about what's happening the last few weeks, it's not really, it's got more work to do, as I said, to get above these highs. Okay, so that's the ASX 200. If we just have a quick look at the stock pick count. Stock pick count this week is up 3. I think we put in 4 and we lost 1. It's up to 47 of 182. That's 41 stock picks of 160 covered and 6 ETFs of 22. So we picked up a couple of new ETFs. There's a couple of stocks we picked up the last couple of weeks. So as I said before, the market is going okay, or our market is. The ASX 200 might be struggling a bit, and a lot of stocks might be struggling. Remember, I got 41 stocks out of 160 there, so there's a lot of stocks that are going down, 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 which we don't want to be in. So just be aware that, the ones we're on are the good ones, and the ones we're not on are the bad ones, and that's why we like it. Okay, portfolio update. Conservatives been pretty flat. It's actually up to this week to 5 out of 20. So it's only 25% equity, 75% cash, which probably reflects the Stockradar count, 41 of 160. It's running at 8%. The 5 stock since inception is up a couple this week to 3. 60% equities, 40% cash, so 16.9% CAGR there. Still not too bad. The Energizer 10 is up to 8 out of 10. Again, we picked up a couple more. 12.8 CAGR, pretty good there. And the more recent ones here, a little bit more volatile, but they've got 4 out of 5, the Energizer that we started in August 20. Okay, so it's 80% equities, and it's trading up at around 11.4%. And the one we started in March 21, which is roughly 2 years ago, it's up to 5 out of 5, 100% equities, and it's running about 9.9% CAGR. So they're all looking pretty good, the portfolios at the moment. We have had a tough time the last year or so, but there's a couple recovering there quite nicely. Okay, so that's the portfolios, and that's what I want to show you about the ASX 200. So we're going to get to some stocks now. Now, last week, I covered quite a lot of stocks last week. This week, we're going to probably tend to focus on fewer stock picks this week. As rallies unfold constructively, we just want to make sure we focus on the quality, and we don't need the quantity. We just need the ones that we hold go up. Other ones can still go up, but we don't need to be involved. We don't have to catch them all. Okay, so it's not about how many you hold, it's the quality of what you do. So start off with QBE, one of our leaders in the insurance sector. I'm showing you this is the progression of the uptrend for QBE, which has now reached a point up here at around $15, where it's an old high, it's an old resistance level, going back quite a way here. So it's significant. We've got an uptrend pushing towards it, and the shorter term uptrend is pushing much harder. We've got some very positive signs here. We've got volume. We've had a selling bout through here, which has also put a bit of pressure on the price. So there's a warning sign, a shot across the barrel, if you like. But the stocks come back again. The stocks come back again, and it's testing these highs again. As I said before, the trend is the most important thing. Resistance is resistance, but it can always be broken. So the trend is my most powerful force unless my stop goes off. And at the moment, for QBE, it hasn't. So we're still in this stock. It's withstood stelling. Momentum is strong. It's well above the average. So there's a nice little trend developing here of high lows, which is a good sign. So QBE is rating at a trend intensity rating of +8 and is looking interesting. But we are at an interesting point at the moment, which we'll keep an eye on. Aristocrat Leisure, well, I had to go at this one a few months ago and it didn't work out too well. It made a new little high here from a trend reversal pattern and went straight back down again. Well, that happens, unfortunately, but we make sure we keep those losses as small as we can. And it wasn't not a nice one, this one, unfortunately. But here we are again, forgotten all that, moving on to our next shot. We've come off these lows here. We've rallied to a new higher low, and we're now pushing resistance here again, which is not too bad. It's had a 36% correction, which is quite a lot from high to low. Volume's not really telling us an awful lot. Momentum is turning positive. It's starting to move above the average, so we're getting the turn, the swing happening. We just hope it will continue up through R1, and we might get some signs of a good uptrend developing there for Aristocrat. So that's one to watch, I think, for Aristocrat, a trend reversal pattern there. Now, Cochlear. Okay, Cochlear is our candidate, a new high candidate today. Okay, I want to just talk a little bit about Cochlear. We haven't talked about it a lot because it's been stuck in this trading range for a long time, but it's now back at its all-time highs. So a lot of the health stocks I've covered recently, we've got things like EBO, SHL, Fisher Paykel, Pro Medicus, all doing quite well. Even ResMed showing a few signs of support again at last. And you might want to check out the chart of Ramsay Health at the moment, which is looking pretty interesting. So the health sector's moving a bit, but today's Cochlear, and I think Mr. Davis, who I've been talking a bit about lately, would love this opportunity because it's a new high. He loves his new highs. So I just want to talk to you a little bit about this, a couple of things about Davis. Firstly, one thing here he mentioned here in his book, I was fascinated to realise that my buying based purely on a stock's behaviour enabled me to profit from a proposed merger or an event that may be building into the insiders without actually knowing anything about it. I was an insider without actually being one. Now, sometimes, not always, but sometimes things show up on the charts. We get a little bit of volume. I think, was it Super Cheap Auto not long ago that jumped strongly before the result and then jumped strongly after the result. So there's things that show up in the charts. So it's an interesting idea to get some sort of tip off as to what happening. And new highs can be a very interesting thing. So he was just using price and volume that gave him that information to get inside the head of what's actually going on with the buyers and sellers. So that's a little bit Mr. Davis. He'd love this opportunity, as I said before. So it's actually not so much about the man. I know I've been talking about Mr. Davis a bit more recently and a lot more in my newsletter. It's not so much about the man, but it's more about the strategy that we all have to have, risk management, discipline, analysis. And it's also about the clarity of the strategy that he delivers. I think it's a very, very simple one, very easy to follow. So what I'm briefly going to do, I'm just going to recap a little bit about how, what some of the things that I have in my trade plan and what he has are quite common and it's not unusual. So if I go to here, it's all about the plan and having your initial premise set as to what you're really looking for, okay? The plan is, I only pick stocks for one reason. It seemed to be rising. And that's what Nicholas Davis said. The only thing he was interested in was buying stocks were going up. Why would you buy a stock going down? I don't know. So that's the first point of call. We always look at that. The second one is, what is the objective? Okay, so the Stockradar plan, our objectives are to get the right stocks through a trend reversal or a price high. Okay, proven method. We work on the win-loss ratio of 50%. We minimise those losses. We run those profits. So we capitalise on these setups, the trend price high. We try and get our timing right. We have rules that define our timing. We make sure we only take small losses, and our profits are big when we can take them. We make sure we do take them because we have trailing stops. So that's really a bit about the objective, simply for the Stockradar plan, and roughly what Nicholas Davis does as well. Now, the weapons we use, and this is where you adapt your own individual part into those things of an objective, where you keep your losses small, your profits big. The weapons that I use, which is part of the execution, is firstly the price action, which is key, and my trend intensity rating, which gives me a good picture of what the technicals are looking like, what the price analysis is looking like. But price is my starting point always. So as I said before, the two setups that I use, my weapons are a new high or a trend reversal. They're both buying. The new high is buying strength or momentum, and a trend reversal is buying weakness after you've had a downtrend. We're looking for a trend to turn up. If we're buying weakness and upside momentum, the leverage from the turn that you can get. So they're the two things that I focus on. I have clear triggers on when I buy, okay? And on trailing stop, I have clear triggers on when I sell. So that makes up my decision-making process fairly simply. So that is the execution. So these are the things that he also talks about, Nicholas Davis, and what he looks at. So, you can input your own weapons in there if you like, but you need to make sure you've got those key things in there that help you decide what you're going to do. So just to finish off there, safety first always, which means risk management, okay? The thing I like about Nicholas Davis and what I try and do is I try and keep it clean, simple, which makes it very safe and very effective. The exceptions to the rules are just really a disaster. You're trying to encapsulate too much. You just want to keep the thing, as I say, keep it clean and simple. Okay, so now let's have a look at the Cochlear chart. So we can just see here simply we've got for the long term here, we've got Cochlear there's the all-time high up there. We've had a rally down here. So between S1 and S2, between about 190 and 160 is our major support area down here. And up here we've got resistance of about 250, I think, is the all-time highs up around here at the moment. So this is it. This is what we're looking for, okay? So we have a decisive rule for the break, and then our plan goes into action. We get our weapons ready, which is our trend intensity, which is at +1, okay? +1, okay? It will confirm a new high, and it will go to a positive rating when this breaks higher, okay? So that's my weapons there, my price action, and my trend intensity. Then I'm using my execution, which I know my execution is, and then I follow with a trailing stop. I set my risk and manage it that way, and that's what happens. If I get taken out of a loss, I do. If I don't, I've got the opportunity of making a nice big profit on a big bullish run for Cochlear. Okay, so that's really a bit about just about what we're looking at, keeping things simple. We've got an opportunity here we've been looking at for a while. We haven't done anything with Cochlear for a while. This opportunity is there. We're ready to play, and that's how we approach our position. Okay. So that's Cochlear. So just on another side of the coin, I always like to look at things like trading range lows, which fascinate me. I used to use a pattern called a key low reversal, but I got rid of that because it was a trend reversal, key reversal, sort of grey area. So it's something that's worth looking at, and I think it's probably something that you can all add to your arsenal. When we get to a trading range low, there is an opportunity. And I think you'll also find, and I'm thinking back to days when BHP was down at $14 and things like that, all the news is bad. Everything is bad. Everyone hates the ASX now. They're greedy money grabbers. They can't do things right. And on it goes. And you've seen this huge selling we've had over the last year or so of the ASX as disaster follows disaster. But we're still back down here holding above the range that we hit in about 2020 and again in 2021. We've certainly given it a mighty blast. We've had a good rally here and a good kill down here and some good volume. It's got 3 lower highs here. We've got some heavy volume here, but still it holds this area here. So that fascinates me for that, because I know the news is probably as bad as it can get, but the price is still holding. So this rally here we've seen this week is really, well, there is somebody buying for some reason. Okay, so they might talk about Nicholas Davis getting insider information. It's just about trying to see what there's buyers here buying, why they're buying, what might be their motivation. So motivation is always very important in this game to understand those things. So When I see this sort of spike happen here, the volume wasn't huge, but it was quite large. It does say someone's buying, so whether they're right or wrong, I take note of it and I try and build my picture from here. And being at a trading range low itself is one thing that interests me. And now we're getting this quite interesting trading action here. The average is just here. We're at the trading range low, so I'm watching out here for a trend reversal possibility here for myself. Anybody who's looking at buying a kilo reversal here can buy with a stop below there, and that's your risk basically. So that's how you would approach those trading range lows sometimes. But I'll wait for a trend reversal to happen before I buy there. Okay, now just talking about sectors before, individual stocks can still be performing in certain sectors. And so you don't want to, the top-down approach can mean you'll miss opportunities. So Stockland is one at the moment. We've had some of the property stocks kick off higher a couple of months ago. A lot of them have failed. Some of them are just going flat. But Stockland seems to be doing quite well for some reason. And the chart attracted my attention when I saw this the other day, or a couple of weeks ago. We've seen this big downtrend, very, very depressing downtrend. And then all of a sudden here we get this high lows here and we start to get a bit of volume here. So these are the signs that I'm looking for. And also this momentum is now turning positive. So all of a sudden I've actually got quite an interesting picture here, and I've got a trend intensity rating of 10 for Stockland. So for some reason things have changed and the winds have changed towards this stock, and we may well see a move towards $5 again after being in the doldrums for quite some time, for a couple of years. So it looks quite interesting. Stockland, you can watch that one, and again the other stocks are being a bit flat, but Stockland stands out in that property sector. And again, Viva Energy, with oil prices finally killing off most of those energy stocks. We've got little Viva Energy here, which is just kicking high, and has done since 2020 quite nicely, thank you. So we've got a beautiful rally here. Then we've now got a high here. This is the all-time highs here. It broke above it, it's consolidated nicely, and it's now rallying through the highs again, and it's up again. So Viva Energy, all the other ones, Woodside, Santos, Beach, are all not doing anything, but Viva Energy's a little spot is doing quite nicely and worth watching. And I can sort of kick up this volume a little bit for you to see. You can see this is quite positive as well. So that's Viva Energy. Just a couple of stocks that are a little bit, in sectors that aren't perhaps in favour at the moment. So that's those things. In the newsletter this week, I'm probably going to talk a little bit about managing your risk even more so. And in certain situations where we get stocks like Temple & Webster, and you remember the COVID period, the online bonanza was just like, this is just never going to end, like they always do these things. Of course, they're never going to end. But it was just quite amazing to see some of the price gains by Kogan, Temple Webster, and a few other stocks in there. And I'm going to talk about this in the newsletter before, because I know a lot of you may have been involved in Kogan, Temple Webster, Megaport, whatever it might have been happen. But, at some stage, when they go up, they got to come down. And it's a matter of not knowing when, but just making sure you're protected against it. And you must be able to do that, because inevitably when these stocks come down, they come down with a blast. And really, you can see from here, it's really just come down with no support at all, from $14 down to $2. And if you're involved in that, that's a wipeout for your portfolio. So those sorts of things cannot be involved. You cannot be involved in these sorts of price declines, and hanging on to them is an absolute portfolio killer. So I'm going to talk a bit about that and show you a few other stocks and how similar this behaviour can be in the stock market, and it's a very easy thing to avoid. So we'll talk about that as I say in the newsletter. Just looking at a couple of stocks that are doing okay. We saw Steadfast in the top 10 back here before. It's just moseying along quite nicely. It pays a small yield of just over 2%, I think. But it just continues higher. It's survived a good bout of selling here. It hardly made a dent in the price, and back up it goes. Momentum is strong. It's above the average. Trend intensity rating is 10, and it's looking very nice. So that's Steadfast, boring and steady, whatever you like, but it's still making money. That's a good thing. So Patterson recently has had a little explosion. It took it a bit of time to get on its bike here after we broke it up here. Just broke above the point here back in February. Had a bit of a lull. Now it's kicked off again. And again, you can see here, you find the volume here is now starting to support this move quite nicely, quite steady and quite solid through here. And you can see these points here within this corrective trend reversal pattern. You can see these buyers starting to move into the stock here and here again, and a couple of other little spots. So that's standard rating, trend intensity rating of 10. It's above the average. Momentum is positive. Volumes all go. So Sol Patterson's looking quite a good one. Okay, in the smaller end of things, I had looked at this one recently. It's an interesting stock. It keeps going quite nicely. it's probably, related to stocks like, Technology One, which is also going pretty well. But we saw this huge trading range for Data 3, and it finally broke out of this early this year, and it's just moseying along nicely high above a nice little trend line, nice little spots to put your stops below, keep them far away so that the market can breathe, but keep them in there so you're protecting the profits you have. We would have profits in this one now, so if we do, we'll be protecting them, okay? So it's above the average, momentum is steady, okay? Provided this continues at this rate like this will go flat above zero, okay? So that's an acceleration factor. And the volume's a little bit indifferent here in the smaller stocks, so it doesn't tell us an awful lot. Okay, so the last stock I got for you today, which we have seen quite a few times, which is finally maybe we're seeing something. We saw the opportunities down here at the lows here of one of these new listing demerger stocks who tend to have this uncertain behaviour initially as buyers and sellers jockey it out and trying to work out whether it's a good stock, bad stock, good float, bad float, good demerger, bad demerger, whatever. And most of the demergers are pretty good in the end, BlueScope Steel, things like that. So Deterra Royalties is within a nice big fat trading range, as we know, but we've got a high low here, which is a good sign. So I can just clip this one up over here and put that there. So we've got a high low here, which is a good sign. And we're testing these highs here, okay? So opportunity knocked down here, and it probably always will at this little level here. But if we get a trade above here, then we get a nice little move. And this is also yielding 7%. Trend intensity rating is +1, ready to confirm anything. So we're keeping an eye on Deterra Royalties, hopefully looking for a little bit of a run on that one. So that's all the stocks I got for today. Oh, by the way, I won't show, but Nanosonics has also started to move higher. Another small one we looked at, we've been following for a while. It took a long time, but finally. So it's just about patience and waiting and just making sure you get your timing right. It's hard enough, the game as it is, without mucking around with your trade plan. So go and check out the Trading Centre. Regular updates on all these stocks at the moment. Everything we cover there. Okay, so as I said to you before, next month I'm going to talk about Temple Webster in the newsletter. Stocks have big uptrends, big downtrends, as we know. So we always try to be in the big uptrends and not on the big downtrends. And that's a fairly simple process if we manage these things properly. So that's what we're going to try and do. So make sure you keep your trade plan simple, clean, safe and effective. And that's the most important thing. It then becomes an actual joy to manage. Okay, so keep things simple and clear. Okay, that's all I got for today. Stay safe. Watch your trends, heed your stops. Call me if you need a chat, and I'll be back next week for a few insights on what's happening on the markets, okay? Good luck for the week.